Hello, and welcome to another episode of the Justin Haskins Show. My name is Justin Haskins. Thank you for joining me today. I have a really awesome show, great news. But before we get into that, a quick call to action. Please take a minute to like this video, subscribe to this channel, leave a comment, leave a 5-star review if you're listening on a podcasting platform. All of these things are going to help more people see this content. It doesn't cost any money, just a little bit of your time. So subscribe to the channel, like the video, leave a comment. All right, let's dive straight into the topic. I don't expect this episode to be a particularly long one, but it's a really important topic. This is something near and dear to my heart. This is something that I've been fighting for many, many years now. I've been working with state lawmakers across the country, briefing federal legislators in Congress. I've been working with some of the biggest names in media on this topic. Special shout out to Glenn Beck, who also is very passionate about this news. I'm going to see if I can get on Glenn's show maybe this week, maybe next week. I don't know, so that we could talk about this with his audience, because this is a huge, huge deal. Big news coming out of an exclusive story from the Wall Street Journal about a new regulation. Well, actually, it's a new executive order that's going to be tied to a whole bunch of regulations from the Trump administration that's going to make it illegal for banks to discriminate against customers on the basis of their political affiliation, on the basis of their religious views, which they weren't supposed to be doing anyway, and potentially other things, as well as the kinds of legal businesses that they're engaged in. So if you're involved in a legal business, banks are not supposed to be discriminating against you under the upcoming executive order that's coming out. Currently, under the existing laws, believe it or not, banks can discriminate against legal businesses, and they can discriminate against people based on certain views that they have, things that they say in the public. If they're a particularly prominent politician, they can be discriminated against. They can be denied banking services. They can be like bank accounts and loans and things like that, and treated differently as a result of that. Most people don't know that that's the case, but that is the case. Now, they're not supposed to be discriminating on the basis of, certain protected classes, characteristics like your race or your religion or your gender or things like that. But they can discriminate based on other things. And sometimes they do discriminate secretly against, like, maybe your religious views or something, but they don't say that that's the reason why they're discriminating against you. They hide behind things called reputational risk and other characteristics like that, where they say that the reason that they don't want to do business with XYZ group is because they're too controversial. It causes a reputational problem for the bank, or they don't trust where the money is coming from, or something like that. But in reality, these are just excuses that they use so that they don't have to do business with groups that they don't like, or maybe that have become a headache for them because there's protesters or activist groups or big, powerful figures in government or institutions that say, we don't like this particular group of people. So there's been lots and lots and lots of stories in the past tied to this. So we know that it's happening. We've heard it from numerous people, the most famous of which being the president himself. The president himself has been debanked by a variety of banking institutions. His businesses, him, his family, even his son, who I think at the time was just a teenager, Barron Trump, was denied access to a bank account because of who he was, at least according to Melania Trump, the first lady. That happened. Banks should not be doing this. They should be open for business for everybody who is a responsible customer and who is engaging in legal business activities. But they should be open for everybody. And they're not. They're not. Now, I think they've been getting better in the last year or so because they're scared to death of retribution from the federal government now that Trump is coming back in, or now he has come back into the White House. But for a while there, banks were using their financial muscle to push the country in a certain ideological direction. And all of that is now stopping thanks to the Trump administration. So let's pull up this article from the Wall Street Journal talking about this story. This is an exclusive from the Wall Street Journal. So kudos to them on this. It's a huge story. White House, sorry. It says here, wait a second. Okay. White House preps order to punish banks that discriminate against conservatives. The White House is preparing to step up pressure against big banks over perceived discrimination against conservatives and crypto companies with an executive order that threatens to fine leaders that drop customers for political reasons. A draft of the executive order, which was viewed by the Wall Street Journal, directs bank regulators to investigate whether any financial institutions might have violated the Equal Credit Opportunity Act, antitrust laws, or consumer financial protection laws. Violators could be subject to monetary penalties, consent decrees, or other disciplinary measures, according to the draft. The Wall Street Journal reports the order could be signed as soon as this week. According to people familiar with the matter, it is possible the court order could get delayed or that the administration's plans will change, obviously. It doesn't name any specific banks, according to the sources to the Wall Street Journal, but it appears to refer to an instance where Bank of America was accused of shutting down the accounts of a Christian organization operating in Uganda based on the organization's religious beliefs. This is a very famous case, a very famous example of what I think is obviously discrimination against a group, a religious group. The bank has said it closed the accounts because it doesn't serve small businesses operating outside the U.S. I think that's I think it was a case of discrimination, but the draft order also criticizes the role that some banks played in an investigation into the January 6, 2021 riots at the U.S. Capitol. Banks had essentially debanked all sorts of people who were related to the January 6 stuff, but they also just debanked politicians that they didn't like. There's been examples of organizations, charities that really have had nothing to do with January 6th or anything like that have also been debanked. A lot of them related to religious liberty and things like that. Or religious missions. And so there's all sorts of groups that have experienced this. And it's not just from banks. It's also from payment services like PayPal, and others have been caught doing this. Moms for Liberty, for example, is an example, a group that has been debanked. So, I mean, this is something that has absolutely happened. It has absolutely happened. The banks say they're not doing it, but of course that's what the banks would say. There has been instances where they've actually said to customers that they're not going to do business with them because of X, Y, and Z reasons. Very similar to what went on with President Trump. Everybody, in some cases, some of those banks were very open about why they didn't want to do business with Trump. So when asked about the Journal's report on the draft order in a CNBC interview Tuesday, President Trump recounted his own experiences being dropped as a bank customer, including at JP Morgan Chase. Quote, "The banks discriminated against me very badly, and I was very good to the banks," Trump said. He had tons of money. According to him, he had like hundreds of millions of dollars in JP Morgan Chase, and they suddenly debanked him after he left the White House. Just incredible stuff. It was in the wake of all the January 6th backlash and all of that. And Trump and his businesses were targeted by banks, even though they weren't doing anything illegal, because people wanted to distance themselves. These institutions, these banks wanted to distance themselves from Donald Trump at that time and all of the businesses that he was engaged with as well, or many of them. The JP Morgan Chase spokeswoman said that the bank didn't close the accounts for political reasons, and that it agreed with Trump that regulatory change is needed. I think that's interesting. Why would a regulatory change be needed if banks never discriminate against customers? What's the point of that? So that's kind of a weird thing to admit. The bottom line here, the big takeaway is that finally a president is standing up to banks and saying, you're not going to discriminate against customers on the basis of their political views, their religious affiliation, and other things. We're not going to allow it. We're going to stop all of this nonsense. It's also said that the executive order is going to direct agencies to remove any kind of regulations that may have been sort of coercing banks. Maybe that's a strong word. Encouraging banks might be a better way of saying it, to discriminate against customers because of quote unquote reputational risk or other things. Because banks are afraid of regulators. And I've heard Donald Trump say this. In fact, in that CNBC interview that was referenced earlier in the Wall Street Journal article that I just mentioned, he talked about that. He talked about how the only people that banks are afraid of are regulators. And so when a regulator says to them, hey, who are you doing business with? Are you doing business with the right people? Are you doing business with people who aren't battling climate change, aren't committed to our views on climate change? What about January 6th? Are you doing business with people who are tied to January 6th? If they even get a hint that this is something that the bank regulators don't like, then banks will often just look at the writing on the wall and say, we don't want anything to do with this. It's not worth the trouble that this might cause. We're just going to change our policies, find a way to get out of these relationships with these potentially harmful customers, and we're going to walk away because we don't want to get into any trouble with our bank regulators. And that's exactly what was going on. So the executive order will also remove all of those regulations that are in place that are pushing banks in that direction as well. So that's another really good part of this, this regulation. So all of this is really, really, really good news. This is great, great news. This is a huge, huge victory for the pro-liberty movement. And it's something that I've been fighting for years now, for many years. As some of you know who have been following my career for a while, I was a huge part of the anti-Great Reset movement when the Great Reset was first rolled out in 2020. Glenn Beck and I worked really closely on the Great Reset, and a huge part of the Great Reset was the use of ESG and social credit scores and financial institutions as a way of pushing the entire economy toward left-wing goals. Okay, but it doesn't necessarily have to be left-wing goals. It could be whatever the elites want. The point is, it's about elites using their power and their control and their wealth to force society to move in a particular direction. That's what the Great Reset was all about, resetting the global economy by getting all of the powerful institutions moving in the same direction. And because you, the individual, don't have the same kinds of constitutional protections against a private institution like a bank as you would a government institution, they have more power to discriminate against you and treat you badly. And so we saw very early on in 2020 and beyond this trend, and it got worse and worse and worse in 2021, 2022, 2023. We saw this huge movement by big institutions to try to push the country toward left-wing goals. Because at the time, that's what the Davos crowd type people, the Biden administration, that's what they wanted. And honestly, it was looking really bad there for a while. It was looking potentially catastrophic. And we saw this wave of backlash from states. States were really the first line of defense against this. Florida, for example, passed an anti-ESG law, several anti-ESG laws, but maybe the most important one was the anti-debanking legislation that they passed in Florida under Ron DeSantis and Republican-led legislature there. In Tennessee, they passed another law like that. And they've passed lots of anti-ESG laws since Glenn and I started working on the Great Reset in 2020. All of it flowed out of that Great Reset research that Glenn and I had done and his whole team over there at the Blaze. I mean, we did so much work on the Great Reset, and then states pushed back against it. There was this grassroots movement against it, and now it's culminating in this effort by the Trump administration formally shutting these kinds of policies down, with banks at least, nationwide. And that's what this executive order is going to do whenever it's released. So absolutely huge news, something that I think is it's one of those under the radar stories that really matters a lot. because of not only the discrimination that was happening, but the chilling effect that existed as well. So this was a huge win. Now, that's the good news. Let me just talk about some of the potential disappointing aspects of all of this. And it's not even related to the Trump administration per se, so I don't want to try to make it about that. The reality is, this is one of these situations where we're having a president put executive action into place, policies and regulations at the executive level that are really good for freedom. But because they're being done through the president and not passed as a law by Congress, the next president can come in, and if the next president has a different view of things, they can just pass a new executive order and completely change everything overnight. And we could go right back to the same kind of discrimination that we had before, where banks and financial institutions, because it wasn't just banks, you also had Wall Street firms doing this kind of thing. You had insurance companies doing and threatening this kind of thing, especially against certain kinds of legal businesses related to the fossil fuel industry, and it was more on that end of things. But you had this real problem. It could come back. Just because it's going away now doesn't mean it won't come back in the future, because you can't trust these big institutions, big financial institutions, big banks. You can't trust them. They're not acting. They didn't have a change of heart. They're doing what they're doing now. They're starting to roll these policies back because they have to. And the Trump administration is making sure that they do. But the next president could change the rules. This has already happened, in fact. When Donald Trump was on his way out of office after during the end of his first term, the very end of his first term, they put an anti-debanking, it wasn't just about debanking. It was an anti-discrimination regulation in place at the Office of the Comptroller of the Currency, which is one of the big, the OCC. It's one of the big federal regulatory agencies that regulates banks. And they put this anti-discrimination rule in place. And it made it through all of these different regulatory hurdles that you have to go through, review periods, public comment periods, all the stuff. It made it through all of that. It went on to, it was scheduled to go onto the books. And before it could actually take place, Trump left office, Joe Biden came into office, and then he killed it. I think it was the very first week he was in office. He killed it. And then all of a sudden, you had the Great Reset crowd go bananas. And suddenly you had discrimination all over the place. It was getting worse and worse and worse. Now, this kind of thing has been going on and on and on for a long time, but it ebbs and flows. Barack Obama, when he was president, had something called Operation Choke Point, and it did something very similar. It was all about discrimination. So you've had these problems with financial institutions for a while, but depending on who's president, the problem either goes away or mostly goes away, or it gets much worse. It just depends. So this is good news, but it doesn't solve the problem permanently or even semi-permanently. It could easily become a problem again. So how do we fix the problem? We need a law. We need a law from Congress. That's how we fix the problem. That's how our system of government is set up to work. Well, there is a law that has, or a bill that has been proposed in Congress. It's been proposed in Congress multiple times over the past several years. It's called the Fair Access to Banking Act. And this legislation has been reintroduced this year in Congress. In the Senate, it was introduced by Kevin Cramer, a senator from, I believe, North Dakota. And in the House, Andy Barr, who is a congressman from Kentucky, if I'm messing that up, I apologize. I'm doing that part off memory. But they've introduced the Fair Access to Banking Act. They've done it for a long time. Lots of big co-sponsors of the legislation in Congress. Some of the biggest names in Congress have backed the Fair Access to Banking Act, like Tim Scott and Ted Cruz. And, Marco Rubio was a supporter of it before he went into the Trump administration. So lots of people have supported this, big names on the Republican side, but it hasn't become law yet. And frankly, despite the fact that Republicans control the White House, the House, and the Senate, we haven't really seen the Fair Access to Banking Act move forward. It at present, right now, does not look like it's going to become law before we get to the next election. Now, that could change, but right now, that's what it looks like. And so we're back in this same, we could be back in this same boat when the next president comes in. If the next president is a Democrat, and if that Democrat wants to follow in the footsteps of the previous Democrat presidents, which is likely. So the real question here is, why is Congress so bad at doing its job? If the Fair Access to Banking Act got to President Trump's desk, he would sign it into law. Why hasn't that happened? Who are the Republicans in Congress who are stonewalling this, who are stopping this from moving forward? Those are the questions we need to find out. I'm working on it now. I don't have an answer for you. I frankly don't understand why, with all of the support we've seen in the Senate and the House, we aren't seeing the Fair Access to Banking Act move forward more rapidly. But it needs to happen. Because while this is great news from the Trump administration, this is awesome. This is great. And it's not just great for Republicans and conservatives and it's Christian groups. It's great for everybody. No one should be discriminated against by the financial institutions. These big, gigantic corporations with all the money in the world, all the power in the world. They're supposed to be public corporations serving the public in the open marketplace. They shouldn't be allowed to just openly discriminate against people on the basis of something that they said on Twitter or something like that. That's just not okay. It shouldn't be tolerated. It shouldn't be allowed. But it could happen if we don't have the Fair Access to Banking Act put into place. So we know we'll get at least a few years where we don't have to worry about this under Donald Trump. But after that, who knows? So this is something we really need to pay close attention to. But for now, let's take the win while we can get it. Thank you for watching. That's it for today. I told you it was going to be a short episode. My name is Justin Haskins, and until next time, please stay